Initial public offering or IPO refers to turning a privately held business into a public one. Smart investors can make a handsome return on their investments, that is ROI, through IPOs. Investing in IPOs may be wise if you're a knowledgeable investor. However, not every impending IPO will present a fantastic opportunity. Unquestionably, benefits and risks go hand in hand. It's crucial to go over the fundamentals before you join the band of IPO investors. Welcome to Freedom Money channel, guys, and in this video I shall be sharing a complete guide with you regarding the investments in IPO. Investing in IPOs can be an exciting opportunity to invest in newly listed companies in India. So let me help you understand the process and make informed investment decision. What is an IPO? Let's answer this question first. An IPO is the process through which a private company offers its shares to the public for the first time, enabling it to raise capital by selling ownership stakes. By investing in an IPO, you become a shareholder of the company. Next point, research and due diligence. Before investing in an IPO, it is crucial to research and analyze the company thoroughly. Consider factors such as company's financials, business model, competitive landscape, growth prospects, industry trends, and the strength of the management team. Analyze the prospectus and financial statements provided by the company to understand its fundamentals. Next point, SEBI guidelines. In India, IPOs are regulated by the Securities and Exchange Board of India, also known as SEBI. Familiarize yourself with SEBI guidelines and regulations pertaining to IPO investments. These guidelines protect investors' interest and ensure transparency in the IPO process. Review the red herring prospectus, that means RHP. The red herring prospectus contains essential information about the company, including its businesses, financial risk, and the purpose of the IPO. Analyze the RHP to gain insights into the company's operations, competitive advantages, and growth potential. The RHP is available on the SEBI website and the websites of the lead manager and the stock exchanges. Choose a reliable broker. Select a reputable and SEBI registered broker or a stockbroking platform to facilitate your IPO investment. Ensure that the broker provides access to IPOs and offers user-friendly platform for placing bids. Open a demat account. To invest in IPOs, you need to have a demat account. A demat account holds your shares in electronic format, eliminating the need for physical shares certificates. Choose a reliable depository participant to open a demat account. Apply for the IPO. Once you have completed your research and selected the IPO you wish to invest in, you can apply for it during the IPO subscription period. You can apply either through ASBA, that is Application Supported Block Amount facility, or by submitting a physical application form. ASBA is a more convenient and popular method where the funds required for the IPO are temporarily blocked in your bank account until allotment. Allotment and refunds. After the IPO subscription period ends, the company evaluates the demands and allocates shares to its applicants. If you are allotted shares, the company will credit them to your demat account. If you are not allotted any shares or receive a partial allotment, the blocked funds are released and the refund is credited to your bank account. Listing and trading. Once the shares are allotted, the company lists them on the stock exchanges. The shares can then be freely traded in the secondary market. You can choose to hold the shares for the long term or sell them based on your investment strategy. Monitor and review. After investing in an IPO, monitor the company's performance, financial results, and industry trends. Regularly review your investments to ensure if it aligns with your investment objectives or not. Stay updated with the news and announcements related to the company and make informed decisions regarding your holdings. Now, let's discuss some IPO investment tips now. Number 1, IPO investments has a 3-day window. Never invest on first day or second day. You should invest on the third day. Invest only if the subscription is more than 4 times. You should invest in afternoon of the third day. This investment time will help you get more clear idea about subscription status. You should only apply for more than one lot if the subscription status is more than 10 times. Number 8, if you only plan to invest for listing gains, then you should sell as per the only plan. You can carry forward your position only if you're confident in the company for long-term investment. Now, next question to answer is how much money you can make on IPOs. Some factors that can impact the returns on IPO investments are as followed. Company performance. The performance of the company in which you invest plays a crucial role in determining the returns. If the company performs well, expands its market share, increases its revenue and profits, and executes its growth plan successfully, the share price may appreciate, resulting in potential gains for the investor. Market conditions. Market conditions at the time of the IPO in the subsequent period can impact the returns. Positive market sentiment, favorable economic conditions, and investor appetite for new listings can contribute to higher demand for IPO shares and potentially lead to higher returns. Conversely, challenging market conditions or negative sentiment can result in lower demand and subdued returns. Pricing and valuation. The pricing and valuation of the IPO shares are important considerations. If the IPO is priced attractively, providing a reasonable valuation compared to the company's fundamentals, it may enhance the potential for positive returns. On the other hand, if the IPO is perceived as overpriced or lacks adequate justification for its valuation, it may limit the upside potential. Allotment and holding period. The number of shares allotted to you during the IPO and the holding period can impact your potential returns. If you receive a significant allotment and hold the shares for a longer period, you have the opportunity to benefit from the company's growth and potential appreciation in share price. Overall market performance. The overall market performance of the stock market can influence the returns on IPO investments. A bullish market with a positive trend may support higher returns, while a bearish or volatile market may pose challenges. It is important to note that there is no average or fixed amount of money one can make from investing in IPOs in India. The returns on IPO investments can range from substantial gains to losses, and they can vary significantly from one IPO to another. So guys, we have reached the very end of this video. Hopefully you all would have found this video insightful and useful. If you want to know more about investing in IPOs, there is a detailed course on our app, so you can simply go on Play Store and download Freedom app right now. There are more than 1,000 courses on our app, from personal finance, businesses, farming, so you can learn a lot from our app. Download Freedom app right now, which is India's #1 livelihood platform. This is Abhinav Sehgal signing off. I shall see you all in the next video.